Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm an education coach and senior manager here at Schwab, and this is Getting Started with Technical Analysis. I have a question. So we've bought a stock. When do we sell and take profits? Well, today we're going to be talking about 5 ways that a trader might use charts to plan when to take their trade profits if they manifest themselves. So should be a good discussion. I think it's going to be a key item of interest for just about everybody watching. So we'll get to that in just a moment. Before we do that, though, let me first of all say hello to everybody that's already chatting in out there on YouTube. Hello there, Speak Truth and Richard, Joe, Jay Richardson, the Sim Architect, Austin, Robert, BJ, Josh, Bob, David, everybody else. Thanks for joining us week after week. We always do appreciate your attendance and your contributions to these discussions. If you're here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the fact, enjoy the presentation. But be aware that you're invited to join us in a live discussion. This is a Tuesday webcast series. It kicks off 2 o'clock Eastern. We'd love to have you here in the live stream. And I also want to let you know that my very good friend Mike Fairborn is going to be hanging out in the chats with the live audience. He's going to be addressing any questions that I can't get to during the natural flow of the presentation. Mike is great coach here. He brings a wealth of knowledge and experience to this discussion and to other topics. So it's great to have Mike here. Thanks for having my back there, Mike. And Mike and I would like to issue an invitation to you. If you're not following us on X, please do that. It's a great resource to connect with your favorite presenters in between the live streams. Best place to connect with me between the live streams. You can find Mike there at Mike Fairborn CS. You can find me on X at Cameron May CS. But let's get into this. Let's talk about when a trader might choose to take profits according to what they're seeing on a stock chart. And as we do, of course, the first thing that we need to do is pause to consider the risks associated with trading. Risks are real, so bear these disclosures in mind. They are important. The information here is for general informational purposes only and should not be considered an individualized recommendation or personalized investment advice. Investing involves risks, including loss of principal. Schwab does not recommend the use of technical analysis as the sole means of investment research. And any investment decision you make in your self-directed account is solely your responsibility. Finally, past performance, no guarantee of future performance as market conditions do change. They can change rapidly. All right, so let's get into this. I want to set an agenda, pretty straightforward agenda today. So I think one of the, easier things, I don't know if I want to say it's easier, but deciding when to buy a stock, okay, that might be comparatively straightforward, but when might a trader choose to take profits? We're going to be talking about 5 ways that a trader might use chart tools to decide enough is enough, take some profits. Now, obviously, there's the other side of the coin, which we've actually addressed in a previous webcast discussion. So I'm going to show you a link where you can go and watch a video that I titled 5 Ways to Use Charts to Plan When to Sell a Falling Stock. So you want to check that out. But today I thought we'd talk about the other side of things, the more fun side of things, when to sell. So we're going to be looking at some trade scenarios, assuming an entry and using 5 different approaches for planning when to take profits. Some a little bit less aggressive, some a little bit more aggressive, some more conservative, some shooting for a more distant target. But we're going to go right to the Thinkorswim desktop software platform. And Ram says, hey, thanks for y'all's help. Absolutely, Rams. We always appreciate the opportunity to deliver these webcasts. And also, as I did earlier in a webcast, to provide some additional chat support. I was taking Mike's role, just answering questions of the audience. Jay Redson said, I like that link of when to choose to sell a falling stock. Hey, why don't we start off with, I was actually going to show that at the end. I don't mind showing that right at the beginning. This brings me to the point that yes, the vast majority of our webcasts are recorded and then archived to our YouTube channel. So you can find those in the playlist. So let me show you where to find that. So you just go to our Trader Talks channel on YouTube. So the full name of our channel is Trader Talks Schwab Coaching Webcasts. And right down here on the home page is a playlists link that lets you find our previous webcasts, and they're organized by series. So if you scroll right on down, just go right down closer to the bottom, you'll find my Getting Started with Technical Analysis series, and you can view the full playlist right there. And then about 3 months ago, so it's not a back-to-back discussion here, but about 3 months ago, 5 ways to use charts to plan when to sell a falling stock. Right there. All right, so you can find that after the webcast is over. If you're watching the webcast as an archive already, you can click pause right now and go find this link and prepare it for reviewing the other side of the coin. But let's talk about when to take profits. And I'm going to start with one approach that almost, for some, might just feel like it. Oh, Cameron, it's almost too straightforward. Let's take a look here at Meta Platforms, and you can see that it's recently pulled down, and a couple of reasons why a trader might see some technical evidence for entry on a stock like this. One, it appears that recently there's been a previous price resistance, a price ceiling, that seems to be happening. It seems to be acting as a price floor just about here. Also, there's a trend line rising over the last 12 months, and it seems like coincident to coming down to that price floor, we're also hitting about on that trend line. And even if we look at the individual candles, you can see this white candle looking like it could swallow up the previous candle. What do you call that, guys? I'm going to zoom in here on just the last few months of trading here. Look at this candle right here, November 19th. Big white candle, looks like it could swallow up the little tiny, the comparatively smaller candle of the 18th. What do we call that? That's known as a bullish engulfing pattern, if you know candlestick patterns. That for some traders is a potential entry signal when it's at or near a support level, or they might just be looking at a bounce where we get a close above the high of the low day. All of these things we've discussed in previous webcasts. But let's say for whatever reason the trader has taken an entry, they purchased some shares of stock and they're trying to decide when to get out. Well, for some, it may be as straightforward as this. While the stock is low, and if we want to sell high, maybe the definition of high for some traders is just to look to see where has high been in the past? Where are previous highs, or even just one previous high? And you might notice here with Meta, it's been up to around that $600 level about 4 times in recent history. Right up around $600 and sold off, up around $600 and sold off, up around $600 and then sold off. So the first potential reason to take profits using charts for some traders is just to look at previous highs. So an entry taken recently on Meta, for some, they might just be looking to get out at $600. So that's one example of that sort of behavior. Sometimes we get multiple touches at one level. There might be fewer touches at other times, maybe more touches. How about we look at Google? Here's another stock that's recently pulled down to previous lows. Looks like recently a price floor seems to have been established around that 163 level. We've pulled down to those lows. We hit a low day right there and started to bounce. For some technicians, they might think that we're heading higher from here. Well, where might the trader plan to take profits if we're bouncing off recent lows? Again, they might look to recent highs. And in this case, looks like there's a confluence of evidence right there around that 182 level. So if we're bouncing around 163-ish, maybe the plan is to take profits here at 182. In either scenario, is it a guarantee that we're absolutely going to get to those price levels? Of course not. Therefore, maybe a trader wants to have a plan for the other side of the trade, when to take or when to take losses, or when to sell a falling stock. Yeah, you might want to check out that video that I referenced. So I don't know if there are any huge revelations there for anybody in the audience today. Sell at previous highs, that seems pretty straightforward. Yep, sometimes the simplest approaches are potentially among the most effective. Can anybody agree with that? Has anybody ever just decided, you know what, I'm going to buy this stock because it's low compared to where it's been, and if it just gets back up to recent previous highs, I'm going to take my profits? And I think that there are plenty of traders watching right now that can relate to that sort of trade logic, and that can carry its own degree of validity. But let's go a little bit deeper. It's not always, first of all, it's not always obvious that there's a recent high. Sometimes a stock is trading at or above recent highs already, maybe in a breakout scenario. But let's look at a different way, a second way to use charts to plan when to take trade profits if they're starting to manifest. And that is using an approach known as a measured move or a price pattern. Both of these can be used in the same basic way. For this, let's look at, for example, MasterCard. So MasterCard is a stock that's recently hit a high here. However, look at where the price is trading right now relative to that high. There may already be some traders that are cashing in profits. They may be getting up close to their previous price targets. But for others, though, they might say, wait a second, those traders are selling themselves short, potentially. I don't mean that literally, I mean that figuratively, because in trading, selling yourself short can actually have other implications. Matter of fact, let me draw in one more move here. But some traders, to establish a price target or when they're going to plan to take their profits, will look at what's called a measured move. What they do is look at recent historical moves and gauge the distance of those and make an assumption regarding an apparent new move that's starting to try to gauge how far that move is likely to go. Here's what I'm talking about. If we look back over the last 6 months or so on MasterCard, you can see that it's been running up and pulling back. It's been running up and pulling back and running up and pulling back and sort of repeating that pattern over and over time. Othaya says, could this be a bear flag? And a bear flag on Google? Actually, I'm tempted to go back and look just to see, but I'm going to resist the temptation to go back to that other chart. A couple of reasons. We did actually have a discussion of trading with flags just a couple of hours ago in this in our webcasts that was taught by Ben Watson just a couple of hours ago. So it might be retreading recent water. Another thing is just in the interest of time. But in any case, good question. But I want to talk about using what's called a measured move. So with MasterCard, over the last 6 months, it's been running up and pulling back. Well, what a trader might do when they see that, their stock is pulled back again, and it looks like it's starting to run up once again. How far might it run in this case? Well, maybe it would be useful to go back and look to see how far it had run up in previous moves. So just eyeballing things. I'm going to use round numbers here because it's all just an estimate. If we try to get it down to the penny, we're probably overthinking things. We might be making it more precise than it really can be. But in any case, if you keep your eye on these numbers over here, we can just estimate. Looks like this started at $430 and we ran up to about $470. 465 to 470. But that was basically about a $35 to $40 run, and then it pulled back. Came down here to 440, ran up to about 470. Again, that's about a $30 run. Waffled around for a while, down to about 460, and then up to about close to 490, call it 485, about a $25 run. Anyway, I think you see what I'm doing here, measuring roughly the moves here. This looks like that's closer to a $30 move. This one was closer to $40, going from 482 up to close to 520. We'll call it 35 again. But in doing this, a trader might get their fingers basically on the pulse of the stock. Now, it's not a guarantee the stock is going to repeat the pattern that it's established in the past, but our trader here might be saying, well, if I'm trying to gauge how far the stock might run now, if I were to say, well, maybe it'll run $25, maybe it'll run $30, maybe it'll run $35. Does the stock have any recent demonstrated history that it's capable of doing that? Yeah, as a matter of fact, on average, it's moved probably $30 to $35 6 times in 6 months. So our trader here might think, well, if I can just get it to do that a 7th time, maybe I can make some money from that. Now, if the assumption is, let's just use $30 as our example here. Let's say our average run up is $30. It may not be fair for the trader to say, well, I'm buying right now, so I'm going to assume that it's going to run $30 from my entry. The stock doesn't care that I'm buying right now. If it's going to repeat previous behaviors, well, the most recent run up actually started down here closer to 510. So where might the trader plan to take profits if they're already in their trade here? Probably in the neighborhood of 540, going up $30 from 510. There we go. So that's called a measured move. And traders can sometimes do that using a series of runs in a nice upward trend like we have here on MasterCard, or they might use things like price patterns in behavior in price They might use rectangles or triangles, symmetrical triangles, flag patterns. All of those things share a common characteristic, and that is it's common for traders to look at the depth of the pattern and use that as a measured move to plan for when to take profits. So as an example, let's move over here to maybe, let's see if Costco has that pattern. Yeah, Costco had a recent pattern. This is more of a rectangle. You can see that Costco was going back and forth between about 865 on the low end up to in the neighborhood of 910 on the high end, trading between support and resistance, about a $45, maybe a $50 range in price. So let's put ourselves in the shoes of a trader who saw this breakout right here. We finally push up through that $910 level in a fairly definitive way. Where might a trader plan to take profits on this next move higher? Well, they might look and say, if the stock was trading in a range of $45-ish, maybe we can just copy that range. I'm going to right click on that, duplicate my drawing here, and drag that up. This is just to illustrate what's going on in this hypothetical trader's mind here. But if we were trading in a $45 range previously, and we break out of that range, what might a new range be? Well, maybe it's going to trade now between, for example, 910 up to maybe 955. So that's another way that a trader might gauge when to take profits if those profits start to pile up using what's called a measured move. So we can use it by measuring previous advances, yes, maybe previous declines on a bearish trade, or we might use a price pattern such as a rectangle. I don't mind. Let's have a look at maybe one more example. I think there was one. Yeah, that's another rectangle on Sherwin-Williams. How about we look at Microsoft? Microsoft has a recent breakout. What do we call this? When the highs are going lower, but the lows are going higher on a stock chart. This is another price pattern. It's known as a triangle. Specifically, it's a symmetrical triangle because there's some symmetry to how much the lows are going up and how much the highs are coming down. But in this triangle pattern, look what's happening today. There's a breakout here, and the stock may be getting set to advance. Couple of different ways that if a trader is taking this as an entry, a couple of different ways they might plan to take profits. Number one is they might look to a previous high. That's one way that we've already discussed. Or they may take the measured move, the depth of the pattern. In this case, it looks like, what was our low here? About 406 up to a high around 436, about a $30 depth. If we get a breakout here at about 422, maybe that would project up to about 452. That would take us past this previous peak and up to maybe here. So, Sim Architect, all right, I'll give it to you. Nice. Sim Architect says, you know, we have Thanksgiving approaching rapidly. For those watching on the archive, they might see this after the fact. But yeah, it's Tuesday right now. This Thursday is the Thanksgiving holiday. So we're going to call this the turkey beak pattern. All right, that'll work. But in any case, whether we're using price patterns, if you're not familiar with price patterns, maybe just using the measured moves doesn't take quite as much training and understanding to just look at where did we start a move and where did we end? Where did we start a move and where did we end? Where did we start a move and where did we end? Just measure those. In any case, none of these carry a guarantee that a stock is absolutely going to repeat what it's done in the past, but the trader can just start to build a trade around the assumption that it might. Bill, did you like Sim Architect's suggestion there? All right, we're going to be back to symmetrical triangles as of Monday. But that's number two. Number three is using sort of a mathematical approach. So our first approach was using previous highs. Second approach for planning when to take trade profits, measured move. Third approach is using the math of how much the stock itself has tended to move in recent days and weeks. This approach is going to be more of what we might call a momentum trade approach. So I'm going to use as our example for this one, let's use Palo Alto Networks. Get rid of this Fibonacci, although we might come back to that. Yes, we are going to come back to that. Anyway, but here's Palo Alto Networks. And our trader might note, in this case, stock has been running up and pulling back, running up and pulling back, running up and pulling back. And maybe they use a measured move approach here. But another way is just to look at the size of the candles, basically. What we're looking at is if a trader thinks that the stock is pulled down to a support and is starting to rise, they may just think, if this can just go up for a few days, maybe I'll just take some quick profits on a momentum move on the stock. So my plan is, let it run for a few average days. Well, how do we gauge average? Well, there's an indicator here. So this is our first usage of an indicator on our charts. I'm going to go up to our Edit Studies icon, and for planning our exit here, we're going to use something called the ATR. Faya says, how do you find the stock examples for this class? I literally just bring up the S&P 500 here. I'm gonna hit pause on that thought for just a moment. So this is not the only way to look for stocks, obviously, but yeah, I'll typically just look at the S&P 500 component companies. I have those organized from largest to smallest here in a watch list, and I'll just click on them and look at their charts. Just doing that. That's it. And see if they illustrate the point that I want to make. Yeah. Obviously, I could do this with other stocks. I could do it with smaller cap stocks. I could do it with NASDAQ stocks, whatever. That's just the way that I typically find our trade examples here. It's always just as examples anyway. These same concepts, can they be applied to small cap stocks? Can they be applied to stocks from whatever source? Yeah, they conceptually could, because regardless of the source, these approaches have the potential to work. They also have the potential to fail, so we have to have a plan in place, or the trader typically has a plan in place for if the trade works or if it doesn't. So back to our example here, let's go back to Palo Alto. And let's say that our trader sees that it's pulled down, it's just starting to bounce and rise off support. And their plan here is just to ride the momentum for a few days. The spark of that momentum might dissipate pretty quickly. So what they might do is use a momentum tool. And this one, for this example, I'm going to use something called the ATR. I think a lot of you are going to be familiar with this, and a lot of you might be very familiar with the usage of it for planning the exit in case the trade is not going well. However, for some traders, they use it as an exit plan for getting out if the trade is going well. So an ATR, if you're not familiar with this, let's add this to our chart. Click Apply, click OK. We're left with this purple oscillating line down below the price chart. And you'll notice the current value of this line right now is 1119. I'm going to do a little bit of rounding of all those digits there. 1119. What does that 1119 mean? Well, it just tells us that over the last 14 days, you'll notice the number 14 here, the average true range, that's what ATR stands for, the average range in price over a 24-hour period is about $11.19. That's what ATR stands for, average true range. If I were giving this a name, I wouldn't have gone with true. I probably would have called it the average trading range, because I think that would be a great description of what this is actually reviewing. Yeah, it's looking back at the candles over the last 14 days. That's the default. The default can be changed if the trader has a preference to do that, but that's the default construction of this indicator. And it can be sometimes used as a gauge of how much the stock tends to rise or fall. Just what's the average distance traveled in 24 hours. So if our momentum trader is just thinking, well, let me get 2 or 3 days of upside momentum here, it might estimate for that trader how far this is potentially likely to travel over the course of 2 or 3 days. So if the value here is about 11 bucks, I'm going to round off even the 19 cents here. If Palo Alto is moving up or down on average about 11 bucks, and let's say our trader wants maybe 3 days worth of quote unquote productivity average productivity, that might project upside of about $33. In other words, you might say 3 ATRs. So a common practice here is for a trader who uses ATRs either for planning their entry, for planning their profit taking or their stop loss placement. They may multiply the ATR. So our trader here might take 11, multiply it by 3 ATRs or $11, and that would give them a target of maybe $33 higher. Oscar says, how does one perform analysis on a stock with minimal price supports like PLTR? Oscar, I'm not going to go off into, support analysis on a different security. Again, it would be just too far afield from what I wanted to discuss today. However, support and resistance are important discussions that we've had in the past. You may want to go to, this is what someone can do if you're interested in a specific topic like that. You can just go to the Trader Talks channel, Trader Talks Schwab Coaching Webcasts. Right here, there's a search engine. So you could type in, for example, support. Hit enter on your keyboard, and it's going to find, 5 ways to identify support and resistance. There you go. If you want to learn about that, there's that guy giving you 5 ways of doing just about everything. I actually didn't expect to see that video pop up, but there it is. All right, so using multiples of the ATR. For some traders, it might be 2 ATRs. For some traders, it might be 3 ATRs. Doesn't typically extend much beyond that because quite commonly a trader is just looking for short-term momentum here. So getting 2 or 3 days in the right direction if one's timing is pretty good, might be adequate for the trader. Tim Architect, you like that? I think you're referring to the video when you say neat. Okay, so that is a third way to use charts to plan when to take profits. So previous highs, measured moves, and ATRs. Now, a fourth way is using a drawing tool that's available here on Thinkorswim. Let me remove our ATR here. There we go. And let me leave it right here on Palo Alto. So just with what we've discussed, you're probably seeing several different ways that plans might be made for when to take profits. We might just look at this and say, all right, another $33 and we're out. Maybe that might be up around, what would that be? Up around 427. That would be up here somewhere. Maybe a trader is just looking to get up to this previous high. Maybe they've used measured moves. Is there a right or wrong selection here? It's all up to trader preference. What I would suggest, though, is that a trader probably wants to pick one approach and then just work to get good at that approach. See if it can be productive for you. But a fourth approach is to use a Fibonacci tool. And actually, a Fibonacci, much like a price pattern, is actually recruiting the concept of using a measured move. It's just sort of automating it for us. So for those of you who are not familiar with Fibonacci's, guess what you can do? Yes, you can go to our Trader Talks channel. You can type in the word Fibonacci. So that's how it's spelled. 1 N, 2 C's. Just hit enter on your keyboard, and you'll see a beginner's guide to using Fibonacci's to trade stocks. So if you're not really familiar with these, I'm not going to go deeply into the weeds into how they're constructed. I did want to talk about more how they might be used for planning price targets, for planning when to take trade profits. But there's a 45-minute discussion that'll go deeply into this tool. But basically, this is found right down here in our drawing tools. And the one that I'm going to be specifically using today is known as Fibonacci retracements. So approach number 4 in planning when to take trade profits using charts is to use a Fibonacci retracement. And the typical application using this drawing tool is we look for one of these strong advances when we're looking for bullish trades. Let me close up this left column. It's just sort of hanging out there doing nothing. But we look for a strong recent advance in price, and we're going to go to the absolute high of that advance and click once, having selected our Wiley says most coaches. I need to do that. I had to get a statue of Leonardo Fibonacci. I don't know. It's not. I think it'd be hard to find a statue, to be fair, because I don't know if one exists. Anyway, yeah, it's not one of the other more famous Leonardos, but yeah, Leonardo Fibonacci is a gentleman for whom this indicator is named. Anyway, but having selected this drawing tool, we go to a recent large advance in price, click at the absolute high, and then go down to the bottom and click at the absolute low. So you can see I went to this low here, up to that high there, drew from high to low. It's quite important here, the order in which those clicks take place. So let me show you what's going on. When we draw in those Fibonacci's, what this does is it automatically applies potential areas of support and resistance. The support may assist with entry identification. The resistance levels may assist with planning for exits, for taking profits. Now, if we draw the other way around, so like, let me take this one as an example. Here's a big, strong, recent move. Let's go to the bottom down here and click. And then I'm going to draw it up to the top here. Here's the issue with that. What we're trying to do is plan where the resistance levels, where price targets might be established and profits taken if price continues to rise. Well, we do that using Fibonacci's by using these, what are called Fibonacci extensions. So above our top click, we see some additional lines. That's only the case if we draw from the top down. If we draw from the bottom up, the extension lines are actually additional support levels down below. It's not useful in establishing price targets. So let me right click and remove that drawing. Yeah, Sim Architect says if you're planning a bearish trade, you do it the second way to get the extension downward. Exactly right. Yep. So a bearish trader, they might see, a big move down here. It didn't work out, but they draw from the bottom up, and it can give them potential support areas down below. Yep. So now the first area that may carry some significance, assuming we have an entry, might just be a retracement to the previous high. That's actually not adding anything to the discussion that we've already had. However, beyond that, using an established set of ratios, the system automatically generates potential price ceilings. Now, one of the default price ceilings is 161.8. If you're not familiar with Fibonacci's, let me give you a quick recap of where that 161.8 comes from. It basically looks at the distance that was traveled upward. So it's looking at this distance right here. Right there, down to there. It assumes a retracement of about 1/3, which would be down to about here. And then it further assumes a repeat of this distance. So we run up, we pull back. How much might that next advance be? Well, maybe it's proportionate to the original advance. And if we run up again from here, that carries us up to 161.8. It's just a repeat of the original advance. And for some traders, that actually produces a potential price target. Now, I've actually customized this indicator. I did it in an earlier webcast a couple of weeks ago. I added another line. This green line is not one of the defaults. So if you're not seeing it, it's not that you did anything wrong. I just added that, but just using another one of the typical Fibonacci ratios. Bottom line, though, here is that our Fibonacci user will just use this tool, look for a big advance. Let's draw from the top to the bottom down here, and then use this. That's interesting. I didn't plan this, but it's the way it worked out. If you'll notice, we ran up here on this big advance, pulled back about 50%, which is a common area for entry. Look where we encountered the first area where traders may have taken some initial profits, right at the previous high. As we advance above that, look where we encountered the next level where they may have taken profits, right at that 138.2. That's interesting. Didn't expect that Didn't plan that to happen. A trader might have hoped for that to happen. But Sim Architect, thank you for pointing that out. There is a survey for those that are attending the live webcast right now. I just want to give you the heads up that there's just been a survey link that's been added to the chat window. If you would do me this favor, click that survey link right now and fill the survey out when the webcast is over. That'll allow you to give me some honest feedback, but it's a very short survey, 2 multiple choice questions, a comment box and a suggestion box. And I just want to say, I promise you, if you take the time to fill out that survey, it goes right to me. I get that data, I get the comments, and I take the time to read through it all, and it definitely helps. So please, if you would, fill out that survey. It would definitely be appreciated. So thank you, and thanks, Sim Architect, for pointing that out. So there is a 4th potential way that a trader might use charts. In this case, a chart tool to plan for when to take trade profits. I think, yeah, we have the time. Let's look at one more example of those using a clean chart. How about we look at Netflix? Netflix has just made a couple of pretty dramatic runs up. So we already have an upward trending stock, and then it accelerated higher, pulled back here a bit, accelerated higher again. So a trader might have looked, if they're a Fibonacci trader, they might have seen this initial advance, and when it started pulling back, draw from that high down to that low to establish where the stock may advance next. And interestingly, we've come right up to that 161.8. We're pulling back again, but more recently, let me right-click on this and remove that drawing. Here's a second advance. So we might click here at the top of that move, down to there, and a trader might see this is already pulled back about half of this distance. Maybe it's set to advance again, and their price target might be up here in that 970 range. We'll see if it gets there. All right. So there's a couple of examples of you using Fibonacci's. If you need some repetition, just go look for Fibonacci's on the Trader Talks channel and watch that webcast, because for me to just do sort of a cursory overview of how these things work obviously leaves a lot of questions about that tool. So you may want to go check that out. But, and Sim Architect says it's like a self-fulfilling prophecy, maybe because of automated trading or psychological influence on traders when setting targets. There's always the possibility. Can we entertain the possibility that if a sufficient number of traders see a stock that's going back and forth between $40 and $50, and they start buying with the plan to buy at 40 and then sell at 50, that it sort of starts to perpetuate the way the stock behaves and becomes in its own way a self-fulfilling prophecy? There's always the possibility of that being an element of how a stock behaves. However, there are just so many different ways that a trader can view a chart. I think if we got 100 of the people that I've been training now for a year, and we got us all in front of one chart, and we looked at that same chart, and then everybody had to go off to their own separate corners and make a plan for how they're going to trade that chart, despite them all learning from the same person, I would suspect they're going to come up with virtually 100 different ways to execute a plan for that chart. And that tends to water down the impact of the self-fulfilling prophecy of technical indicators. Yeah. So no, it's a good observation. I don't know how impactful it is, because not everybody sees every chart through the same lens. All right. So finally, let's talk about a 5th way that a trader might make a plan for taking profits on a chart. And it could relate to just using a technical tool, a technical indicator. There are so many technical indicators. I just wanted to use one as an example. Let's switch up our chart again. We'll go with T-Mobile for this example. And you're probably looking at this already and saying, boy, I could draw a fib on there. I could use a measured move. I could use an ATR. Yeah, lots of different ways that it might be approached. But, and I don't actually need these old drawings back here. Just while I'm doing it, let me clear this up. There we go. But I'm going to use an example indicator known as the MACD histogram. Lots of you are probably familiar with this one. Lots of you probably are not. But the MACD histogram is a momentum indicator that is designed to hopefully help assist a trader recognize short-term turning points in price behavior. So with this oscillator, when it hits a peak, when you start to see the light green transitioning to dark green, that may be a hesitation point for price advances. And in some cases, it may signal that price is about to pull back. To the opposite extent, when the MACD hits a low and we start to see light red transitioning to dark red, it may signal that prices are at a short-term low, momentum is shifting from the sellers to the buyers, and maybe price is set to advance from there. So a trader, let's put ourselves in the shoes of a T-Mobile trader who's using this indicator. They may look at a recent low here, going from bright red to dark red, signaling maybe an entry as recently as just a couple of days ago. Looks like our most recent entry signal using this approach would have been right there. When might they take profits? Well, for those that use technical indicators, using MACD histogram as an example, they might use a signal like the green transitioning to red. So a recent example of that would have been right here on November 13th. Our histogram was rising higher and higher, green bars staying bright green, transition to dark green right there. This may have been a recent signal for a trader of the MACD histogram to take profits. Is it exactly equivalent to let's say a measured move recently? Probably not. Is it exactly equivalent to what a Fibonacci might have projected? Probably not. Is it going to line up neatly with what an ATR might have said to use as a plan for taking profits? Probably not. But the point here is there are lots of different ways that a trader might plan to take profits using stock charts. So which way is the right way? It's up to the trader. But what I would say is pick one, run it through a whole series of trades, see if it works, see if it's not working, can we get better at it, or do we just need to move on to a different approach? But guys, with that, we've actually accomplished 5 different ways that a trader might use charts to plan to take trade profits. Of course, we've already hit this point on a couple of occasions already. It's sort of an incomplete plan for trading. If all that we're thinking about is how we can make money, we're not recognizing the fact that each trade carries a potential for losing money as well. So we might want to have a plan in place for managing that downside risk. So just as a quick reminder, we can go back here and how about I'm going to use a keyword here to find this quickly. If we come to our Trader Talks channel and if we type in the word falling, let me see if that's going to find that for me. Did it not find it? It's going to be down here somewhere. Anyway, all right, I'm going to do the playlist approach. We can go to the playlist, go down to our Getting Started with Technical Analysis series, which is down at about the lower third of our playlists. Click on View Full Playlists and scroll down until we find 5 ways to use charts to plan when to sell a falling stock. Jay Richardson, you like that webcast? Excellent. Hey, thank you, Sim Architect. You have a lovely Thanksgiving too. Will, thanks for the feedback. Everybody, it's always my pleasure to deliver these webcasts. I hope that comes through. Really enjoy what I do. But hope you enjoyed our discussion of 5 ways to use a chart to plan when to take trade profits. We're going to do some other technical approach next week where I'll pick a new topic. We'll talk about getting started with technical analysis through a different lens. Maybe it'll be a tool, maybe it'll be a concept. But I'd love to see you again next Tuesday. I have other webcasts between now and then. I'd love to have you join me in those. Also, make sure that you're following Mike and me on X. So you can find us on X. You can find Mike here at Mike Fairborn CS. You can find me at Cameron May CS. It's the quickest way to connect with your favorite presenters in between the live streams. You can even see what I was up to when I wasn't here doing my webcast last Friday. I was off in Miami at the Market Drive. Yeah. That was fun. Look at that. That's November in Miami. That's not fair. I'm in Utah. Anyway, yeah, follow us on X. Thank you, everybody that's already clicked the like button. Over 100 people are watching, and I can see 48 of you have already clicked that thumbs up. That's always appreciated. If you enjoy one of our webcasts, make sure that you click the like button on YouTube before you leave. It's a pat on the back to the presenter. It's always appreciated. It also gives their webcast a boost in the YouTube algorithm. All right, everybody, I'm going to set you loose. Go enjoy the rest of our webcast for the rest of the day. I'll see you in a future webcast. I'll also look for you on X, but whenever I see you again, until that moment arrives, I want to wish the very best of luck. Happy trading. Bye-bye.